priority stack in the case of liquidation of an investee company. I'm a learning partner Sushila Hariharan, and if you're interested in a career in investment banking, trade life cycle, hedge fund accounting, and OTC derivatives, do subscribe to my YouTube video where we provide content-centric, research-focused videos on these topics. So what happens when a company goes bankrupt? Who is paid out first? Is there a priority stack? Let's learn more. So when a company goes bankrupt, it is a legal proceeding, okay? Since it's a legal proceeding, there has to be a clear documentation, legal documents supporting the bankruptcy and the liquidation of the assets thereof. So in the first case, once the company is declared bankrupt and the legal approvals are got, the priority stack is fairly understandable. Okay, the first one to be paid out obviously will be the secured creditors, or in our case, the senior bond holders. The senior bond holders are those who are having collateral on the assets of the company. So when they're having collateral charge, then those assets which are collateralized to the lender, right, will have to be liquidated, and the money that is got from selling of those assets will have to be paid to the creditor. Make sense? Okay, so the first entity to be paid off is the secured lenders. The next entity to be paid off are the unsecured lenders. So remember, a loan is a contractual obligation between the borrower and the lender, to wherein the borrower agrees to pay interest on predetermined intervals at a predetermined rate or reference rate, and the lender will receive the principal on maturity, right? So therefore, in this case, we understand that the borrower has to pay the interest at the predetermined intervals. If they are not able to pay, then according to the local central bank classifications in India, RBI classifies the assets and helps in providing the classification guidelines. We then understand that the loans have to be classified into different categories. So the assets are liquidated and the senior lenders are paid out first. Then those assets which are not having a charge on them, right, they will be liquidated, and the unsecured lenders are paid off. Okay, is this clear? So amongst the lenders itself, there are two categories: secured lenders, unsecured lenders. Secured lenders are paid out first, unsecured lenders are paid out second. Then when the company's assets are still there, who is paid out? The preference shareholders. Preference shareholders are paid out after all legal obligations and payments are made. And then finally, the fourth entity to be paid off is the equity shareholder. The equity shareholder is paid last, naturally, because they're the owners of the company. So as owners, their risk is the highest. So creditors of the company are paid first. In the creditor list, the ones who are having a charge on the assets are paid first. Then the ones who are not having a charge are paid. So secured lenders, unsecured lenders, then preference shareholders, and if at all anything remains, then the remaining proceeds are distributed to the equity shareholders. Sounds very simplistic, but in reality, this entire procedure can take upwards of 2 years after the company has declared bankruptcy, because liquidation of assets with different ownerships, different beneficiaries, etc., is very, very challenging for the bank itself. So therefore, the priority stack is to be followed by all creditors and stakeholders at the time of liquidation of the assets. Thank you.